Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Thursday. I believe today is February the 9th, yes. And this will serve as our chart lesson for today. And today was almost a perfect repeat of yesterday. We started off trending downward, had a failed break lower below a double bottom right down here, and then prices pretty much trended up the rest of the day. And we did have a couple of pretty nice moves today, though. And one thing that was really interesting today was we had this nice measured move. There's leg one, and then there's leg two, and you can see that prices came up to this area, and then that was a great target. And that's generally what you'll see in a good move. You'll get a perfect measured move, and that's pretty much it. We got there a little early on the second leg, but you can see that prices got to that point. We had a little correction back to the EMA, and then we tried to go higher, got a little higher, tested this area up in here, and then eventually sold back off. So I'm always telling you to watch for the measured legs, and it's important that you do because those are generally great targets. And I'll show you, I think we got, I believe this one was fairly close here. There's leg, even though that doesn't look like it, that's leg one there. Then you had your correction that actually broke the trend line. I didn't draw that very well. Let's get a perfect measurement there. And then there's your leg two, and you can see it went a little bit lower, but that was to be expected because you expect prices are going to test this previous low. And but that's close enough to get you, if you'd have gotten out right in here, you'd gotten out almost at the lows. And definitely, usually I would exit an area like this and then look to re-enter if prices tried to go lower. I would re-enter on a breakout pullback short there rather than sticking through that breakout, because generally what's going to happen is that even if the trend's not going to reverse, you're going to get a nice correction like this right here, and then prices may sell on off again. But always watch for those legs, and I bet you if you look at it again right here, there's leg one, then a two-legged correction, and then there's leg two, which that's a perfect measured move, and it's kind of two legs as well. And there's actually some additional legs in the middle in those. But always use these measured legs. And then if you look at there, then here's your two-legged correction in the middle, and then look where prices went to, right almost to that target. And these targets will work very well. And then this two legs will probably be fairly close here as well. Actually, I didn't draw that one very good. There's leg one, then a two-legged correction. And there's leg two, and look where it went to, one tick further than that. So learn to measure your legs and look for those for targets, and look for those to be where prices are probably headed. And you can count on that pretty regularly. And if prices don't get there, if prices would have come up on that leg that was down to here, if prices would have stopped to right here and reversed, then that's a good sign that prices are going to go much higher, because so whether it gets to the target or not, that's telling you something. But here's our original trend line from the overnight that we had. You could have had one coming up through here as well. See, if you draw that one, you would have had this one as well. But we were below that really by the time the market opened. So I was leaning towards this trend line right here. But regardless of whether you had this one or not, you still got the same results. We broke the trend line. We tried to go up. We tested that trend line twice, couldn't get above it, and then prices sold off. And we did have that nice measured two legs down to a new low where prices stalled, and then we had a failed break lower and reversal, and prices traded up the rest of the day. And this is almost a perfect repeat of what happened yesterday. We were trading down, tested the overnight low, and prices broke lower and failed, and then traded up the rest of the day. And another thing you'll see a lot of times is that if the first leg is real strong down, the second leg looked like this one was real choppy down. And look at this one, the first leg up was real choppy, but then the second leg up is real strong. And don't ask me why prices do that, but you will see that quite often. It's very rare that you see two perfect legs that look perfect. You will see it, but when the market's ranging the way it has been lately, we did have quite a bit more volume today, as you can see, than we have. Look at all the bars in there. probably twice as many bars as we had in some days recently. So the volume was there today. Even though prices didn't really trend, there was a lot of volume. We basically just spent the day in a probably about a 10-point range. You look at the lows down here, 41, the highs up here around 51. So pretty much a 10-point range today. So just typical of what we've been seeing over and over lately. And I circled the best entries. Really, this one was questionable right here, but we'll wait to talk about it. Your key entries were right here. I circled this one. This was a little bit before the open, but people asked me about that. I know some of you trade the open, so I circled it. If you were trading, you probably would have had your trend line off these first couple of bars here. When we tested it again, it turned down. You could have gone short right there. You actually could have gone short right here because this is a failed break higher. But you needed these couple of bars to really set up the double top to let us know that there was a double top. You see, if you draw that across there like that, it's much easier to see. Hopefully you can see that. There's no closes up there. There's only stems. All the closes are closing right along that line. So you know that's a strong resistance area. And when we couldn't close up there the second time and prices turned down, you could have gone short right there. And it was a nice little race down here. But again, that was in the pre-market, so you may not have caught that one. But this was the first real break of that trend line, and we know what happens then. You could have actually gone short right here, and if you didn't get in there, you definitely could have entered again right here, and you see it was a nice little sell-off down to the measured low from this leg right here. This was a nice measured leg. And then this is a two-legged pullback to the EMA. And I've been getting several questions lately. It's funny how I'll get a question in a day, and then what'll happen is I'll get that same question from a couple of different people. It's amazing how that does. But some people have asked me about second entries, and I do have some other videos out there, but I'm going to just open this up quite a bit where it's easy to see, and I'm going to talk about a second entry. And in this example, prices are working lower. Hopefully you can see that. We were coming down. We've got a downtrend. And then so every time you get a new low, the count starts over to the downside. You can also have a count going in both directions, but generally your best strategy is if the market's trending down, you're counting your first and second entries off the new lows. And if the market's going up, you're looking for your best second entries counting off the new highs. But in this case, the market's coming down, and I'll just show you a couple of these here. You got a new low right here. See, this low is lower than this low, so the count is 0 here. There's your pullback. There's your first chance to go low from here, so there's your first entry. And then, although you can't see it real well here, this is another pullback because this low is higher than this low. So when we broke below this bar, that's a second entry short, and look how prices sold off. All right, let's find another one. New low, so the count's 0. First entry, but new low, count 0. First entry when we broke there, but new low, so count 0. So count 0, we got a new low. There's your first break. There's your first entry. Prices went higher, and then there's your next break lower. So there's your second entry short right there below those two bars. Again, let me show you that. We're coming down, and every time there's a new low, count 0, count 0, count 0, count 0, count is 0, count. We didn't make a new low there, so the count's not 0. So that's a second entry short right there. Because your count was 0 on this new low, your pullback, your first break of another bar lower is right here. So there's your first entry. Then look, we got a higher low, and then there's the next time prices tried to go lower. So there's your second entry short. This is not a great second entry short setup. But it is a second entry short all the same. So, but this is a good second entry short because look what it is. It's a two-legged pullback to the EMA, to the trend line that reversed and went lower. I mean, these are our money makers. We make more money off this pattern than any other pattern. And somebody else asked me about that today, if you could make a living trading second entries. Yes, you can, and I used to trade these second entries more than anything, and I actually sell a scalping manual that's really all it's based on, is trading second entries during pullbacks to the EMA, because that's how valuable that pattern is. And so, yes, the answer to that question is that's a great way to make money, just simply trading second entries. And I've got several other students, I know that's all they trade, and they make good money trading the markets. Um, so there's your short entries. You really only got two during the regular market hours. I didn't trade this trade right here. I wasn't here when this happened. But I marked it because people have been asking me about the overnight. And what that is a failed break higher there above this double top. It tried to go higher twice and failed, and then boom, it sold off. On the way back up, actually there was a long right here. I didn't mark this one. I should have marked this one. You got a double bottom. It's at the same place where we had this bottom, so this is a broader double bottom, and the broader a double bottom is, the more powerful they are. And the more times prices turn here, sometimes the more powerful they are. So we've turned here 1, 2, 3, 4 times on that attempt, and then 1, 2, and then we finally broke lower, but instantly reversed and came out of there. And look, that bar opened on its low and closed almost on its very high after a failed break lower. So that's showing you that there's strength on that failed break. So going long right there is a good trade, and you can see any runners would have been safe. And just like yesterday, you could have ridden this thing all the way back up here to this high, these tops, and the real high is up here from the overnight. So that's the one we're more interested in. But until we get through this area right here, it's still an important area. Okay, I had an interruption there. The phone was ringing. I'm sorry. Can't remember where we were. But we had this entry down here that was a nice entry that you could have ridden to the top. I think we were talking about this resistance area. So this is the area you're thinking about exiting or being quick to exit if prices turn down or don't go any higher or whatever. Again, this is the more important top because that's the overnight high. You see that's the highest closing of the overnight. There's the where the market opened at 3:30 yesterday. And so this is all during the overnight hours, and right in here is where the market opened, right in some of these bars, right in this area here today. And so this was your first trade, second trade, third trade was going long on a trap on a failed break below, again, the overnight low. And I probably would have originally had my bar right there. And you can see this is why we wait on the second entry, because the first entry failed, and that was the second entry right there. But that's a terrible setup because by that time we've got 1, 2, 3, 4, 5 overlapping bars, and you got to go long above a doji right at the very top. That's a dangerous move to be doing that, even though we're way away from the thing. You want to wait on a second entry. So by the time your second entry got here, you had 2 more overlapping bars, and this one could have trapped some of you, but if you entered here with a 2-point stop or even a 2 ticks below this, you still survived. But even this was not a good setup because we had all this is acceptance of these prices for the time being. Rejection looks like when prices break down and immediately reverse and take out of there and don't hang around, and that's when you want to enter on counter trend, when you get rejection. This is not rejection yet. At first they accepted these prices down in here because look at how long prices stay down in. There's 5 or 6 bars down here. So you want to be careful going long on acceptance. You want to wait till there's a trap or prices, or you want to see rejection. And this is the trap, the short trap where prices, and what happens here is that this trap serves 2 purposes. First of all, anybody that got long here or anywhere in here thinking they were going to get long, they exit right here. So they fool all the longs, for one thing, and those longs have to start buying back when they realize, hey, I entered at the right place, I just got fooled right there, and so they start buying back, and that increases the momentum. And then secondly, they trap in shorts that get short right here that don't understand you don't buy breakouts. And when those shorts have to realize they've been tricked too, then they start buying to exit. So between all the people buying that got trapped out and the people that got trapped in having to exit it really creates some momentum and shoots the market up real fast. And so that's why we like traps, and that's why we like to take advantage of them. And you can generally tell when there's been a good trap because you'll be in all this mess like this right here with all this overlap, and then suddenly the market will rocket lower, just like right here. They trapped a bunch of longs up here thinking this was the low across here, and then suddenly when they all realize what's going on and you get them trapped in and you trap them out, then all of a sudden you see this rocket down. Well, that's the momentum created by those traps, and that's why they work so well. They're great for short-term trades for anywhere from 2 or 3 to 5 points. And here's another one right here, and then this quick move up here is a trap. And then you can see how it kind of got sluggish again and didn't do much, and then we had the pullback. And then everybody was thinking short again, and suddenly the market rockets higher right here, and that's another trap. I'm just going to slide this line up. You got this double bottom across there, and people got short off that big bearish looking bar right there, and people got short on the breakout, and they're all thinking, hey, I'm home free, this thing's headed lower, and then suddenly prices stall, reverse, and that, boom, that trap creates that momentum. And look how the market rockets higher, and that's why this leg is so nice compared to this leg right here. There's this great trap right here on this break lower. So, but you always want to be aware of where your overnight lows are and your overnight highs. They're going to be important areas unless the market is trending very, very strongly. And you can see what happened this afternoon. That's about where prices stalled. They couldn't even close that high. They couldn't close but here where we closed there in the overnight. But that's where this resistance was, and that's really because this is also a failed break above this area right across there. And you can see we got above it, but prices just got stalled and went into a trading range, and then we broke lower. They broke lower right there. They reversed it, but still not enough momentum to get it higher, and then prices sold on down here, and we're testing the trend line again before the close, and we never could get below that trend line. Well, we did right before the close. We closed a little bit below it, so you can see that was a valid trend line. And but this is really just a trading range day overall, and you got to trade it as such and pay attention to these overnight lows. Hopefully you saw that second entry. This right here is another form of the second entry. I'll show you this, and then we're going to call it. This was a second entry long actually right here as well. You got your new high, so the count's 0. There's your pullback, your first bar to go higher. That's your first entry, and since it didn't go higher here, the count still is now 1. Pull back, and then there's your next entry long with a trap because it went below this bar first and then turned up. So you could have gone long right there. There's enough room to scalp out here before getting up here. And you see how prices stalled here. Even though they went higher, this would have been, if you didn't scalp out, it would have been very difficult to sit here and ride all this out thinking you're probably going to end up with a loss and probably exit back down here somewhere just to see it go up here where you thought it was going to go. So that's why we scalp out. We scalp out, and if we really think prices are going higher, we hold a runner. But up here at this high, it's just not very smart to hold a runner. You're better off just to exit and wait on a breakout pullback long that sets up, that's a good setup, that kind of thing. But anyway, I'm going to call it a day. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.